I'm a big believer is you must diversify from your own business and make sure you're getting money out of that. And if you need to expand, I think a combination of that, maybe selling some equities, getting a partner. There's many ways to raise money. But I do think you must diversify your business, get money out of it so that you don't have it all wrapped up in there. And then find other ways, use other people's money. You can have a vendor invest in you too, by the way. That's another way to do it. There's all kinds of ways to do that. But overall, it's like, what do you want the business to do?
Hello, everybody. Welcome to today's episode. Jamie Na here, as well as joined by my friend Jody, as always. So, Jody?
Always glad, Jamie. Always glad to hang out with you.
It's always fun. I'm very, very excited for today's guest. So today we're joined by Zdenek, and he has a really cool app out there called CakeClub, and very excited to talk about that app and how it can help entrepreneurs. So, Al, why don't you tell us a little bit about yourself and kind of your background and your company? Really excited to learn about you.
Okay, well, see, I've been in the wealth management business for 40 years. Had a company called Trial Salas before that. Started out as a CPA, became a wealth advisor when actually I was on the verge of bankruptcy. I realized I knew things about taxes, but I didn't know things about finance. I had some people help me, teach me some really neat ways to make the correct financial decision all the time. I cleaned up where I was in bankruptcy, and I was so thrilled with how they helped me. And I could help other people. I changed my company to a wealth advisory company that would teach people how to make the best financial decisions all the time, be able to reach their financial freedom or financial goals in the time frame they wanted, but also live the life they wanted along the way. I had that firm for about almost 35 years, sold it. And even though that was my mission in life and my firm was sold, I found out that though the company was sold, my mission still was there. So I looked into creating this app. And one of the reasons we have the CakeClub app is I had a young Gen Zer reach out to me and said, Al, I have a PhD. I didn't know how to make any financial decisions when I got out of all my education and read your books. And I think we should be out there helping tens of thousands, if not millions of people that don't know how to make a sound financial choice. So he started saying, I want to do an app. And I said, well, let's do it together. So about a year and a half ago, 2 years ago, we started putting together the app. We had a soft launch of CakeClub app 3 months ago. And we're still building and still modifying it. But so far, we've had a really great response, and we hope to have even better.
So that's really cool. So from what it sounds like, you primarily work with entrepreneurs or really just anybody. That's one of my questions. And then my second question is that we focus a ton on cash flow with businesses and entrepreneurs on the business side. And it sounds like, if I'm not mistaken, is that you take it even further. And once the cash is being pulled out of the company, what do I do with it now? Is that correct?
Well, let me go back to your first question first. Yes. Or actually, the app is aimed toward young entrepreneurs, Gen Zers and millennials who basically maybe have a job, but they're looking to have a side gig and eventually get out on their own. And so I'm happy that's your audience, and we're glad to speak to them. Now, you talk about the cash flow in the business, so to keep in mind that I'm a poster child for not managing a cash flow in a business. That's how I almost went on the verge of bankruptcy. And quite frankly, if you look at the stats, so 80-90% of small business owners within 5 years go under, or they don't exist. And the key in that is that they don't know how to manage their cash flow or look at it. So let's talk about an entrepreneur who's just a really great visionary and has great ideas, but a lousy manager. Well, I would tell them, well, if you can't do it, hire someone, even do a part-time bookkeeper to help you look at how much you have in the bank, how much you're spending, and projections. So get some help on it. If you're someone who just had their firm like I did, which, as long as I had enough money in my checking account, I thought I was solvent. Well, it's not enough. You have to start to put together some things to say, okay, I had enough cash this month and in future months, but suppose the business is, has a blip or something happens. If you don't do that, you're going to get yourself into trouble. Now, you also have the businesses too that They start out with a great idea, but all of a sudden, the market is stable, or maybe it's not the same market it was before. So I always tell those owners, well, learn how to what I call pivot. A good entrepreneur pivots all the time. If it's not working that way, you adjust this way. The goal is still there in the distance, but it may not be a straight highway. And then you brought up to where, okay, now you're taking cash out of the business. Well, that's really great. As long as if you're to a point of doing that and you want to do that in a smart way. So I'll say that there's a lot of tax things that you should be exploring with your tax advisor, where, when you can take it out, you basically start either pension plans, or there's some really great weighted pension plans that you can put literally hundreds of thousands away in this, right? And shelter it so that it grows tax sheltered. And it's really outside the business because that's an independent pension plan. But there are other ways to take money out too. But I'll start there. Do you have any other questions about that?
No, that's a great start. And just so you know, like one of our founding models is the profit focused accounting model, and that's really what we focus on. But one of the first elements of it is cash. And so when we're working with our clients, like cash is first and foremost one of the things we talk about and definitely look at right away is how much cash do they have in the bank, how much reserves. And so obviously we have different methodologies on what we think our cash reserves should be. But I'm curious from another professional, like what kind of reserves do you recommend for clients and how much cash they should have in the bank?
Well, let's get back to cash flow. I'm really glad that you're really cash flow oriented, because that's the mother's milk of any business, as well as politics, by the way. But anyway, I see when owners first get into business or entrepreneurs first start it, they love this. It's easy to know what your expenses are. The income revenue is always the thing that you have to guess at. And then sometimes they get to where they say, "Al, now we're breaking even," which to them means they're covering their expenses, right? But that's not breaking even to me. I teach my entrepreneurs that that's not breaking even. Breaking even is that when you have enough to cover the expense of the business, enough to pay yourself to live the way you want, and pay your income taxes and put away something for the future. That's breaking even. Because if you don't plan your business that well, you're going to be off in pricing. You're going to be off in other things too. That'll just make sure you get to the breaking even, but you don't get to all the other important things. Now, you also talked about reserves. Again, I'm the poster child for that because I had zero reserves. But and I think a lot of people that are bootstrapping or whatever, they didn't even think of reserves, right? But I think this is more personal, and cash reserves is made up of a few things: actual cash in the bank, or lines of credit. Because if you have basically, let's say your expenses for the business is $50,000 a month, you can have $50,000 in the bank as reserves, or you should have at least 3 months, possibly up to 6, depending on your business. So you should have 150, maybe 300,000, right? But quite frankly, that's a lot of cash to tie up sometime not working, right? So what I would do is get to a point where you can have an interest-only line of credit from a bank, or a couple lines of credit. By the way, you should always have 2 different banks you're dealing with in case one sort of wants to call it for you. But have lines of credit, because if you have enough cash, let's say for 2 weeks, a month, or whatever on hand, but you have another 150, 200, $300,000 line, well, then you have really good reserves too.
Yeah, so it sounds like basically what we 10% of your annualized revenue if you're a service-based company, which equates, if you do the cash burn, about 2 months of expenses, and then 30% if you're looking at 6 months of expenses. So we tell everybody 2 to 6 months of expenses to have in the bank, and then have something very equivalent in a line of credit availability. So if you want 2 months, then you might as well get 4 months with the total there. That gives you a lot of space in the event things really go south. Things happen where you get an opportunity buy or opportunity hire, or maybe got like a recession where you need to have that for that short period of time. And so it sounds right on the nose there. Question I would have, you mentioned interest bearing accounts. So for the amount of money that we tell people, we say, hey, two payrolls in your operating account. The rest you go in some sort of reserve account, interest bearing account. Maybe it's an Ally Bank or a American Express or something that's earning 3-4% interest. Is that what you're recommending, or are you putting that extra money into something even different? Like, and if you are, I'd love to hear what your strategy
I
is on
think
it.
if you reserve money always is in short-term money. Don't ever try to invest that money. Don't tie it up. Another thing too, and because you're talking about this, and I only say this from experience because you learn this when banks are, you learn banks are not your friends. If banks only give you money when you don't need them to give you money, they're there for it. But the thing is, but the thing is, yourself, when you get into a time where the economy's bad or there's a recession, banks are definitely not your friends then. And with all these lines of credit, they have the right to pull them whenever they want. So what I tell people is that if you have, let's say, 1 or 2 lines of credit, always have 2 banks, by the way, 2. And then what you do is if we're entering a recession or you hear that or whatever, draw down your entire line and put into another bank. Because I've had businesses I had one business that was in the middle of a $1 million expansion, and they were flush with cash, but they had about a $500,000 line, and the bank pulled it like that. And not only that, they took it right out of their account. They had to balance it. They took it right out of their account. And you got to be careful with that. So make sure you have a couple of banking relationships. If you have a lines of credit, make sure if we're entering a bad time of the economy, you take it down. Make sure it's in a different bank so they can't draw it down. And that's the kind of friendship that I like with banks.
That's a definitely interesting perspective, and I can see how that would be what you said. That would be a rough situation to be in, where you're at a certain point where you need a lot of cash, and then you lose it instantly, and they start drawing from your account. So yeah, that's definitely something that I hadn't thought of before. It's something we can definitely start talking about for our listeners. But one thing we talked a little bit about investments there, and one of the things that I think is a common misconception when you're a business owner is money you're keeping in the business is an investment. And so oftentimes, especially if you're going to make changes within that business. So, again, we work with a lot of service-based companies. And so if you're planning on doing a bunch of hiring, and so you're keeping your reserves, instead of being at 10%, you're keeping it at 30%, that additional 20% is an investment in the business. And so you hope to eventually see proceeds on that investment. So can you talk a little bit more about you mentioned it briefly earlier, but about taking money out of your account and putting money back into your business?
Well, there's all kinds of things to talk about there. You know, uh, I'm a big believer that, as an owner, for one thing, you pay yourself first. So make sure you're paying yourself and just not having cash accumulate in the accounts. And I'll say that, I see this very seldom, but if you have a business that's really, you don't see it growing, if you put more into it, well, then take all the money you can out of it. But the thing is, again, and this is where you have to know where you're going with your business. I remember when we had our wealth management business, and it was in its early years, we wanted to have multi offices. And we were doing it, and we were looked at it prudently and how it was going to cost us, how much money we had to either borrow or put in to do that. And there's some really neat things to do that. And rather than, I'm a big believer is you must diversify from your own business and make sure you're getting money out of that. And if you need to expand, and again, it's different for different businesses, but I think a combination of that, maybe selling some equities, getting a partner. Um, One thing I remember one time after the 2008 crash, you couldn't get a loan for anything from a bank. And we were right in the middle of an expansion, and I had needs to raise about like $1.5 million, a little more than that. And so I thought to myself, how am I going to do this? And I decided, oh, why didn't I sell notes? Now, we were not a big company, but I decided to put together a private placement plan. I got an attorney. It was very cheap, and basically had interest-only notes for 10 years. I was offered 8%, which if you had to go out and get anything in private equity, they're going to ask for more. And they weren't guaranteed. And I was able to keep on with my expansion. And we sold these to clients, to vendors, and they knew we were good business. So it was a different way to raise money. So my whole point is that there's many ways to raise money, but I do think you must diversify your business, get money out of it so that you don't have it all wrapped up in there. And then find other ways, use other people's money. You can have a vendor invest in you too, by the way. That's another way to do it. There's all kinds of ways to do that. But overall, it's like, what do you want the business to do? If you're at $1 million, 2 million? Do you want to go to 4, 10? Because, just don't say, well, I'm just going to, there's a lot of owners who just say, well, I feel like opening an office, have a reason for it. Have a reason have a reason that's going to increase the value of your business.
Mhm.
Yeah, we talk about this all the time about like any financial decision you're making, you have to understand your priorities and you have to understand your goals. And so that way you make sure that those decisions are aligned with those two things. And it's super important for all business owners.
Great.
So kind of relate now that we've talked about the business and how the cash flow comes in the business and now we're pulling it out of the business. How does your app come into play here? How do you vision the best case scenario for your app to come to play? I think curious about it.
Well, the app is right. You're taking money out of the business. The app is basically more personal finance. And, like I'm hoping that a business owner that is having a really good cash management system, when I say that, a good financial reporting system in the company, I hope you match this somehow for yourself personally, because that's extremely important. You must know what's coming in and what's going out each month. So we have basically in the app right now, we have a basically budgeting part of the app. By the way, we don't call it budget, we call it spending plan. Create your own spending plan, because I'm a big believer that people hate budgets. Budgets like, oh my God, restricted. It's like shameful. It's like fail, So we call them a spending plan, and you create it. How much money do you want to spend? And I think it's really important as you're pulling money out. What kind of lifestyle do you want? How much do you want to spend? So you create your own spending plan, and don't make it too. And by the way, we give people three options in doing this. One's called the quick and dirty. Like if you don't really like spending or spending plans or budgets, well, let's say you think your lifestyle's $10,000 a month, $15,000 a month, $20,000 a month. Well, then just take that out and see if you're paying your bills. See what comes in, see what goes out. And if you're within that, okay, maybe you can. That's all the budgeting you need or spending. Some people like to say, well, I like to see where it's going for a little bit. So we suggest maybe you have 4 or 5, no more than 8, categories. Something like a fixed, like you have to pay, like the mortgage, car loan, whatever. Another one is where it's discretionary. Maybe there's a fun one or a travel one, but there's like 5 or 6 categories. And then make sure you automate it. Make sure that the money that's coming into your bank account or you're charging is going to come right into the app. Like in our app, if you put in your credit card information and your bank information, every dime you spend or comes in will be automatically categorized for you. So if you pick the 5 or 8 categories, it's going to be all done for you. So that, again, you're not thinking of a budget or a spending plan. It's going to take time. You can look at the beginning of the month, the end of the month, see those categories, see what came in, what went out. And that's our sort of like our second type of plan that or spending plan we offer to people. The third one is the one that's like if you want 30 or 50 categories and you want to know where every cent went, including what you pay for a stamp, you can have that. And in my 40 years in this business, only 2 people have ever wanted that, and they're both either accountants or engineers, and their spouses were totally against it. So no one picks that one. So I think the one that, but it has to be one that works for you. But yeah, you want to keep on track, just like you do in the business. What are you doing personally? Because you end up liking the business, you waste money. You waste money and you work too hard for that, waste it.
Yeah, so I love the idea that you've got the 2 different plans. You've got the one plan that's, and I didn't even think about it. I don't know why, but it's just like 5 different categories that make sense. Does it also track, like your loan payments and, your net worth, or is that something down the road, or what's your view on that to get a good idea? Because again, a lot of times you really need to know that for the bank purposes or whatever.
No, I agree. So it'll keep track of your loan payments because again, it's a cash flow in and out, and your all your accounts are attached to it. So it will do that. But it will keep track of the amortization of the loan or the loan itself. Now, you're talking about net worth. That's something down the road for us because right now we're a budgeting app to make sure people, I call it, become masters of their cash flow. I've written books on that. I think if you master your cash flow, I think you end up making the best financial decisions for yourself all the time. So we have a budgeting app. And then in my firm, we were different as wealth advisors. We were cash oriented like you are, cash oriented in almost everything a person did. So most wealth advisors say, what's your goals? vacation home, retirement, education for the kids, right? And the concept, they say, okay, these are the amounts of money you need for those goals. And then they say, okay, fine, just save that money for it. And now we'd like to invest your money. That's what they say. So we were sort of like, if for one thing, you had to have a plan for us to even get involved in your money. But ours was like, okay, you could have, we think those goals are important, but we think that all the other things that you do are important. For example, if we just concentrated on your vacation, your retirement, and vacation home, well, we don't get into your business. We don't ask you how do you price, how do you run in your business, or if you work for someone, are you taking advantage of all your benefits? Have you negotiated? Have you looked out there for other opportunities? So we're after more money, and we're very big on tax sheltering and tax work, tax planning, making sure your CPA was really on top of what you were doing, that they were making sure they met with you before the end of the year so that you got the maximum tax benefits. So we were very cash flow oriented in that. So now back to the app. The app is again budgeting because everything starts with getting control of your money. We have a part of the app called Cash Rewards. That if you just tell us what your credit cards are, you don't even have to put in your information, is that we can tell you every time you go to a store which card to use to get the maximum cash rewards or airline points. And it has a GPS in it. It'll keep monitoring all the stores in your area. So that and it'll suggest the ones based on history, because we use AI for this, is to say, are you going to this one today? To remind you of the card to use. Now, so that's where we are with that. But like I said, we have also, you go to our website, which is cakeclubapp.com, you'll see that we have not only the phone app, but we have a site that for every sheet there, you'll see in the bottom right-hand corner, there's a sort of like circular icon. If you click on this icon, another sheet will come up and it'll say, ask Al or ask Albert. And you could ask me whatever question you want. And through AI, our own chat box that has downloaded my books, all my articles and things that I've been, it'll give you, I will answer you the way I would if you had any kind of question. Now, I say that because we're going to put this on the app also. We're going to put this on the app so that, especially Gen Z today, they want to do everything with their phone. So let's say you're at an auto dealership and you're not sure what they're lease and buy. Well, maybe you bring this up and you ask the app. And based on information I put in there, I'll try to guide you as best possible. But that's something we're adding before June. We're adding a lot of other things too, especially in today's world, especially with Gen Z, millennials. They like games. They like also speak emotionally about money and all that. So we have, since my partner's a data scientist, we've spent a lot of time on how do they spurs people spending? Like, is it like I have a bad day, so I'm going to just spend something, or there's emotional spending, there's stuff like that, and so we're trying to help people track that, but we're trying to make it a game too. Kind of make a game like, oh, hey, we see you spend about $200 at Starbucks this month. Do you ever think that if you got yourself a coffee maker, it only costs like $100? But a game, something to like to have fun with them. And then maybe if maybe they have a goal to save like $500 a month. And so if they do that, we have it built in with AI that, oh, hey, look, you made your goals. Congratulations. Hey, maybe this next month, 525, 550. And, or if they don't do it, say, okay, look, he missed that, but is there any way we can help you out? It also goes with AI on our app right now. If you're spending and there's a normal spending, like let's say you're spending for streaming services or channels or subscriptions, it'll tell you that if you're being charged twice, or if you have something that's close, if you're buying the same thing twice, or so that to warn you that you could be wasting some cash flow there. And by the way, there's other things too that we're going to probably add over time, but these are the things that we have now, and we're going to have we're aiming for June 30th.
Yeah, awesome. That sounds like, you're really thinking about everything as you're developing and creating this app. And I love that you're gamifying it. I think that's a big part of cash and the way to make sure that people are having fun while saving money, because sometimes it's not the funnest topic to have with people. We know that from our standpoint. It's like, yeah, you need to build your cash reserve. So to make it fun is a cool way to do it. I am curious about your name of the app, Cake Club. So where did that come from?
CakeClub, so really funny because I'm a little older, so I normally slip into like you know my name personal finance app or something like that's a older, more established or whatever. And again, my partner is Gen Z, and he says, "Hell, that sounds so boring. Come on, are you kidding me?" He says, what do the younger generations want today? Because again, we're aimed at really Gen Z people, entrepreneurs, millennials, but people that they want to have fun with this. So, and they have like apps like Mint, Juke, whatever. They make no sense what they are, but so we started looking at this name, and part of my past came into interest for about 13 seasons, 13 summers when I was growing up, from 12 to my early 20s, college. I worked with my father in a bakery. In fact, we had a chain. He was a supervisor for a chain of bakeries, and he was a master baker. And so I'm a baker too. So, by the way, he wanted me to learn how to be a baker in case I failed at anything else in my life, I could still get a job. Unfortunately, I haven't had to use that. But we started thinking about something like in our past and in a family, and we said, oh, we can use some really neat things with Cake Club. Like, decisions should be easy as a slice of cake or icing on the cake or a cherry on top. And so we thought it would be fun with people. And it's turned out that actually the people we interview for this, as they're downloading our app and see what they like and dislike, they really have liked it. And they've offered some really great suggestions on symbols. Like we have a cake here with a slice out of it. And someone brought up the other day that, this looks like a big cheese instead. You maybe want to. So we get feedback like that. But so it was just something out of the past and fun.
Yeah, the one thing I really got out of our interview so far is that, a lot of times we tell business owners, hey, you know where you're going and what's your end goal? How much money do we need to actually build to? Or looking for an exit plan? How much does that exit plan need to be? I think you take it even one step further with this, because you look and see, hey, how much personal cash do we have? What does our end goal need to be? How do we get to where we want to be? And then we bring it to the business and say, okay, business, do your job and let's make the money to generate what we need to have on our personal scale. So I think it's a great way of looking at it.
I think it's the only way. I mean, you start a business. When you start a business, you should have a reason, not only the fact that you maybe like it and, or whatever, it means something to you, contribution to people, but, what are you trying to do? How's it going to help you? What cash flow do you need to live the life you want now, be able to pay your bills, your taxes, and put aside money to diversify and grow well, so that someday you don't have to be there. And by the way, that's what turned me on when I first started getting this, is that my mentor, I came from a family, blue collar family. I thought you just worked till 65 or 70, and if you had enough money, you stopped, and if you didn't, you just kept on going. I never knew, even though I was a tax accountant, I never knew prospectively that you could actually find out what the wealth amount you needed in the future was at a certain time. And then I'll start to aim your life and align your business toward it. And so when I first did this, it excited me because I finally said, okay, yeah, I want to be financially independent or have my choices by age 50. And I got there by 48. But I got there because now I knew for the first time what I needed for my lifestyle, but I knew what the business had to do. And the business wasn't doing enough at that time. So what I do, I expanded another office. I expanded the business. I got to a point to where I knew what I was getting and drawing out was going to put me right in alignment with that and actually get me there early, which is really neat about a business, isn't it? Because let's say you're doing really well. Let's say you do have a plan like that by 55 or 60 or whatever, you're going to be there with the value of the business and the cash you took out. And then you found other way to increase the cash flow to get you there sooner. Because if you basically grow the value of the business more or get more cash, then the years can come down. And I never knew the interrelationship before that. I think that most owners don't. And I think knowing that, it's really neat. It becomes now our game, doesn't it? Can you beat the clock? Can you do something else? So I think that if you don't know the answer to how much wealth you need sometime in the future, then you don't know what your business has to do.
Yeah, this is definitely a podcast I'm gonna have all our CFOs listen to, Jody, because I think oftentimes when we're consulting on the business and we're asking the questions, what are the goals of the business? And we focus solely on that. And I think your connection between that and the owner's personal goals is really important. So I'm definitely going to make sure our CFOs listen to this podcast. But with that said, we are close to the end of time here, and I definitely want to take advantage of having a baker on our show with our fun questions. So I'm curious what everybody's go-to dessert is. And again, this doesn't have to be something you bake, but if you're at a restaurant and you see this on the menu, like even if you're full, you're like, I'm ordering that. So I'm curious. And Jody, I'm going to start with you just because I know we've had a lot of dinners together, and I know that you love to like go through the menu, and we always do appetizers, we always do meal, we always do desserts, we always do drinks. So I know you have an answer prepared for this one.
Yeah, my go-to is definitely carrot cake. If I see carrot cake on the menu, it's a must. And I don't know why carrot cake, but man, I've loved carrot cake ever since I've been young, and it's always stuck with me. And so, yeah, carrot cake is by far number one.
Okay, good. So I learned something. All right, Al, what about you?
Well, I'll say when you said carrot cake, I love the icing of carrot cake. That cake you can have, but I love the icing. But it's really funny because I could bake almost anything, and I made all the birthday cakes for my sons. I have two sons in their early 40s. I made all their cakes, birthday cakes, every year that they've been born. And at Christmas, we made Christmas cookies and pies and all that. My favorite is pies. I just love a really great pie, especially if cherry or apple. And it's not so much, especially a tart cherry apple, but I'm sorry, tart cherry. But what I really like and admire the most is the crust. As a baker, I love a really great crust. So even if someone else, if I don't get dessert and someone else gets a pie, I'll take part of the crust because I want to see if they know how to make a really good crust. So
Yeah, that's awesome. My answer is that my desserts are still like a little kid in a lot of ways. Like I love a good ice cream sundae, like just with sprinkles and a cherry on it. And then the other, I definitely love a warm chocolate chip cookie. It has to be warm. Like my wife's cooking chocolate chip cookies. I'm like out there, like, okay, once they come out, I have to grab one before they get cooled off. So like those are the two for me for sure. But no, I think this has been an awesome episode. And like I already said, we're definitely going to have our CFOs listen to it. So I'd love to kind of get final thoughts from both of you. So I'll start with you, Jody. Final thoughts on today's episode?
Great episode. Looking forward to testing out your app and really seeing and playing with it and seeing how it can really benefit not only me myself but our clients, and see how that really works. I think it's designed with the entrepreneur in mind, which is great, and the fact that it's not the entrepreneur after they've left the business necessarily. It could be both. It could be while they're in the business as well as when they exit. And so I'm looking forward to seeing what you can do to it now, what you've done to it so far, and what you're going to do to it going forward.
good, thank you.
Awesome. All right, Al. So final thoughts from you, then also obviously the website and the app and how people can get hold of you.
Well, let me just say one thing, especially with the entrepreneurs out there. There's, as you all know, with entrepreneurs, there's highs and lows in businesses, and sometimes there's lows, and you don't know what to do. Just understand you're not alone out there. Reach out to other entrepreneurs, other mentors, and just don't try to solve it all yourself. That's one. Two, if you want to contact me, you can talk to me at alzenek.com or at CakeClubApp.com. I will say, if you want to read more about how I approach money, I've written 2 books: How to Master Your Cash Flow, Grow the Wealth You Need, and Live the Life You Want, and Master Your Business Cash Flow, Grow the Company You Want, and live the life you want. And we're coming out with a new book, Master Your Cash Flow, by June, and it's called Let Them Eat Cake and Grow Wealth. So,
I love it.
Love it. It's a great title. Awesome. Well, thanks to both of you guys. And like I said, I think this is an episode that anyone's listening to is going to walk away with a lot of good thoughts on. So really appreciate you guys joining for this episode.
I had fun. Thanks a lot.
Thank you.
Yeah, thank you.